A secured loan, also known as a second charge mortgage or a homeowner loan, is one of the products that Spring Finance provides. These are the situations in which the borrower utilizes their home as collateral for the loan that they are interested in obtaining. It is important to note that if you utilize your property as collateral for a loan, the lender has the right to reclaim it in the event that you do not complete the required loan repayments on time. You have the option of selecting a secured loan with either a variable or fixed interest rate, and you can borrow up to 80% of the equity in your house. Spring Finance Secured Loans Pros and Cons. Pros. There is a wide range of loan terms to choose from. Cons. The LTV limit is 80%, whereas other lenders we've reviewed may offer up to 100%, although a higher LTV can be riskier. Your property must be valued at £100,000 or more, whereas some lenders we've reviewed don't have a minimum property requirement. If you're looking for a larger loan, the maximum loan size is £200,000. It's possible to apply for a loan of up to £1 million with some lenders we've reviewed. Spring Finance Loans Overview. Spring Finance was established in 2011 and specializes in providing secured loans, which may also be called second charge mortgages or homeowner loans. However, it only works with intermediaries, which means you have to apply through a mortgage broker. The advantage of using a broker is that they can often match you with products that are suited to your circumstances. Where Spring Finance secured loans stand out, you can choose from a wide range of loan terms. With Spring Finance, you could choose to pay back your loan over a term of between 3 and 30 years. Some lenders we've reviewed are only offering loans up to a maximum term of 25 years. Paying back your loan over a longer time gives you the chance to lower your monthly repayments. But note that when you choose a longer repayment term, you're likely to pay more in interest overall. Where Spring Finance secured loans fall short. Lower maximum loan size. Spring Finance might not be an option if you're looking for a larger loan, as the maximum loan size on offer is £200,000. This is lower than other lenders we've reviewed, some of which offer loans of up to £1 million. Higher minimum property value requirement. To be eligible for a Spring Finance homeowner loan, your property must be valued at £100,000 or higher. Some other lenders we've reviewed don't have this minimum requirement, so they could be worth looking at if your property is valued at less than £100,000. What type of loans does Spring Finance offer? Secured loans. Spring Finance offers secured loans in the form of homeowner loans. A secured loan could give you access to a larger amount than an unsecured personal loan at a potentially lower rate. Unsecured loans don't ask you to use a high-value asset, such as your home, as collateral for the loan. However, taking out a homeowner loan means that you're borrowing money using the equity in your home as security for the loan. This gives the lender the option to repossess if you don't make your repayments when you should. The amount that you could borrow, and at what rate, will usually depend on the amount of equity you have in your home, your personal circumstances, and the credit checks Spring Finance carries out on you. Bridging loans. In 2022, Spring Finance also started offering bridging loans. These are a type of short-term loan designed to help borrowers bridge a gap before securing longer-term financing. You might take out a bridging loan if you want to buy a particular house, but haven't got the funds available. For example, if you haven't sold your existing home yet. Because they offer flexibility and convenience, bridging loans are typically expensive products. What can I use a Spring Finance secured loan for? Spring Finance home loans can be used for several reasons, including to consolidate debt, pay for a holiday or wedding, pay for school fees, buy a car, cover the cost of home improvements, cover the cost of making improvements to a rental property. Spring Finance secured loan eligibility criteria. Spring Finance requires a minimum household income of £18,000, with £15,000 of that needing to be earned from employment and private pensions. You must own a home in either England, Wales, or mainland Scotland, and the minimum property value considered is £100,000. How can I apply to Spring Finance? You can only apply for a Spring Finance loan through a broker or mortgage professional. What information do I need? When applying for a homeowner loan, you should usually be prepared to share proof of your address and identity, a utility bill or bank statement, or your driving license or passport will usually suffice. recent payslips or AP60 if you're employed, self-assessment forms or SA302S if you're self-employed, proof of any other income you receive from pensions or benefits, your latest annual mortgage statement, information relating to any outstanding debts, recent bank statements showing your income and expenditure. How long does it take to apply? Spring Finance doesn't have any indicative timescales on its website.